pleasure being with you guys here this afternoon or early evening in the East Coast. I'm based in Santa Cruz and San Francisco, two different places, and then today we're combining two panels that were supposed to be a deep tech and then crypto assets and NFT valuations. So we have a great panelist. The subject is really deep as a deep tech. And then we will hopefully from panels, we're going to find out exactly what that means. And then let me start by doing the roll call and then introduce the panelists. So today we have as I said, the combined two different panels, but they're very complementary. So let's start with let me start with the first panel that was supposed to be as the deep tech, and then we have Lara Druyan from managing director from SVC Capital. Then we have Radhika Iyengar from founding partner from StarChain Ventures. And then we have Wes Jamieson from Oasis Pro Markets. And then also joining us is Marvin Liao from GameGroove Capital. And so let's just go with everybody, and then everyone can just tell their story about who they are, and then what you guys do, and then we'll start figuring all those different subjects that are difficult to understand for just a regular person, meaning the valuations and understanding even the terms, NFTs and such. So let me start with Lara, and if you could introduce yourself, that'd be great. Lara?
I'm here. Sorry, I'm unable to start my video at the moment. It's being controlled by, there we go, somewhere else. So Lara Druyan, I'm managing director at Silicon Valley Data Capital, a seed and early stage fund focused on enterprise and fintech. I started life in technology as a product manager at Silicon Graphics in its heyday, worked on launches in both hardware and then shipped over a dozen software products. I've been a venture capitalist. I've run corp dev at a publicly traded fintech and ran innovation at Royal Bank of Canada, where I served on our firm-wide innovation committee, as well as on our crypto asset oversight committee.
Great. Can Radhika, can you tell us about yourself a little bit?
Sure. I'm Radhika Iyengar, founding partner at StarChain Ventures. We're a Silicon Valley-based venture studio, and we're very much focused on Web3, Metaverse, DeFi, all that's exciting under that umbrella and more. We're also focused on impactful solutions where the convergence of those technologies happens. And I am an enterprise blockchain expert, author of Enterprise Blockchain Has Arrived, which was published in 2019. I'm on the California GovOps Blockchain Working Group Task Force, advising Governor Gavin Newsom and California State Legislature, so work at the policy and technology intersections, and have spoken on so many conferences and venues over the many years recently, just very actively advocating for the new and exciting changes happening under the Web3 umbrella. Thanks.
Well, thank you very much. Wes, can you tell us a little bit about yourself?
Yeah, hi everyone, Wes Jamieson, VP of Strategy for Oasis Pro Markets. We are a SEC registered and FINRA registered ATS for blockchain-based securities settled in stable coins, CBDCs, and some crypto assets. By way of background, started my career out at Gabelli Asset Management, worked in compliance and on the portfolio manager of finances desk. Then I went over to RSM US, the accounting and consulting firm, where I started the blockchain practice there with two other individuals. Done everything from authoring courses for the American Institute of Certified Public Accountants on how to audit the blockchain, teach regulators on tax issues that might arise from transactions in cryptocurrency, and was the lead on partnerships and vendor relationships. Happy to meet everybody.
Great. Well, thank you so much. Marvin, can you tell us a bit about yourself and what do you do?
Yeah, sure. Hi, everyone. Nice to meet you all. My name is Marvin. So I'm a partner and board member at GameGroove Capital. GameGroove Capital is a holding company we have about 20 different assets in the gaming space. So probably more in the traditional gaming area. We have a couple crypto assets like CryCash, for example. So I do that. That's sort of my day job. I also have a side VC fund called Diaspora that actually focuses on pre-seed founders from Europe. And we've done a bunch of Web3 investments there. And also I have a personal sort of like a management investment company that I do deals pretty much from seed all the way up to Series F. So basically I have an arrangement rife with conflicts of interest, but it keeps life interesting.
Wonderful. Sounds great. So let's just demystify certain things for the audience, because for the regular bread eater, the deep tech and NFTs and crypto are still very difficult to digest. Radhika, you wrote the book, right? So you're like the most qualified person here to just tell us, for example, what the NFT is, so we can actually have the understanding of what's coming in the near future. Because I'm pretty sure that eventually we're all going to get used to it and understand it, but for right now, it's just not an easy thing to digest. If you can clarify that, I'd really be appreciated.
No, of course. So, at its foundational element, NFTs are basically proof of ownership of a digital asset, right? I mean, that's the basic building block of NFTs. I mean, people have been looking at NFTs and saying, oh, that's about something to do with art or something to do with some media or something. And sure, it's applications in many different areas are very clear, but there's more and more to come on that. But it's really proof of ownership. Anything that is a digital asset right now, and you have to have a way to prove that ownership, NFTs are really the way to do that. So you can think about the myriad forms and applications that can then relate to. And that's certainly what's happening already. And as it's evident is we're just scratching the surface when it comes to art, but it's art, music, IP, science, technology, really anything that is a creative output, I would say. Any innovative, creative output that is unique, that you need to establish digital proof of ownership. That's really where the NFT comes about. So that's my most succinct explanation.
It's a nice view from I greatly appreciate it, because it kind of clarifies the picture of what it really is. It's just like a validating, like creating a price point for anything that is controlled in the digital world, right? The metaverse of them, which is another deep tech Web 3.0 term that is going to be slowly introduced into our heads, right?
Well, yes.
Yeah. Go ahead, Radhika, please.
No, go. I'll chime in right after you.
Yeah, because I think I want to pile on top of that of just why I think the initial applications make sense now that this wouldn't have made sense like 5 years ago. Between social media, I think a lot of young people coming on board, the fact that most of our lives are digital now. And if you think about sort of like whether it's music or art, of just like, back in the day where we've all supported like bands or supported artists in the early days, this is almost like a digital badge in some ways, where it's like you become part of a community. It's a great way to rally the community around a person, right? Or art, specific in this case, say art or music. And on top of that, where it's just like like, for example, any of these NFTs, where it's like, look at me, look at my NFT, where I'm like, it shows that I was a very, very early supporter. And because I'm helping to sort of promote this art or music or whatever, the value actually goes up in the long run for this, right? So there's a lot of benefits of this. So there's partly digital ID, there's partly sort of the monetary piece of it, but there's so many aspects of it that make this so powerful, especially in this day and age versus say 5 years ago, right? Because of just, that's sort of just my sort of like.
No, I'm glad you said that, because I'll just add on to that, which is, I think that's, as I see it, the here and now, but I think what's exciting is where it's going, which is a functionality in the metaverse. And it's the, when you think about what it's going to mean, translate to when it comes to digital ID and avatars, for example, and you're interacting in the metaverse, which is, you know, in a non-derogatory sense, the alternate reality, so to speak. I mean, and I don't mean that in a derogatory sense. I mean that anything that we're going to be able to do in terms of our interaction in the metaverse to come is going to be based on ownership and digital identity. And so that's really secured by a blockchain-based NFT. So that whole application of the here and now, but then where we're going is really what's truly exciting. It's about anything that we can own.
Yeah, Radhika, I just overheard this. I just happened to have a pleasure of being with at the dinner last night in San Francisco with you and a couple of other fellows. That it was a German fellow that was selling some real estate in the metaverse. You know, some piece of digital alpine mountains. It's kind of, you know, like very, very interesting, but yet foreign to the older people like myself. But you know, we're kind of like being phased out of the picture, and then the young generation has a totally different view on what's valuable, what's not valuable, and it's for them to kind of establish those valuations and what it is that they feel like it's reality versus it's not reality. They were literally raised on Instagram/Facebook's. Yeah, Facebook is now for older people, but you know, like whatever it is that they're using now.
Well, you know, I think to your point, I mean, yes, we had an exciting dinner conversation after the IvyFON forum yesterday, but I think that, you know, to be truthful, everything that we're interacting, you know, in the digital sense, you know, and then this metaverse that we are a part of, that we're going to be a part of increasingly, it's really the blurring of lines between the tangible world today, but then extending it out into the digital world. And so, you know, when you think about land that you can own or anything that you can own, but now, you know, there's a graphic that I wanted to talk about, which I think we talked about at dinner last night, which was, you know, in Web 1.0, it was, let's say Alice, right? Or me, whatever, Alice can post, I can post. And then in Web 2, it's Alice can post and fill in the blank tech giant or someone else, some other big entity makes money off of it. And Web 3, it's Alice posts and Alice makes money. So it's a very consumer-centric, user-centric sort of model in terms of how do you make money, right? And so this is really where the excitement is at. And when you're talking about the blurring of lines between physical and digital and this new metaverse, it's very creator centric. And that's why I said the NFTs, of course, based on blockchain technology, is that creative output ownership, right? Ownership of that creative output. And so this creator centric economy that we're talking about and in the metaverse is going to be so much more rich and multidimensional than anything we could possibly imagine even today in the tangible world. So, you know, when I hear people talk about the metaverse, I'm also talking by the way of an open and decentralized metaverse, unlike some tech giants who are trying to come up with a more closed and non-central, you know, more centralized version of the metaverse. I'm really talking about the open and decentralized metaverse, which is a huge difference in mindset because in that open and decentralized arena, you're talking about users, you and me and consumers being able to own what they own, rightfully so, and making money off of it, which is a very different construct to what we have today. So, you know, that's what's exciting is the user definition of what's own, you know, what ownership really means, right? And being able to resell that and sell that and make money off of things, which is something that just doesn't exist in today's centralized sort of world. So I think the driver for all of this is Web3 adoption. So the Web3 is sort of that largest umbrella that you can think, where all of these things that we're thinking about, whether it's DeFi, whether it's NFTs, whether it's Metaverse, it's all of those things under that big Web3 umbrella that are going to combine in unique and exciting ways. And that's really the future that we're marching into.
Well, that's great. Yeah, I'm trying to understand. Coming in from computer science myself, it's just like the world in front of me is changing so rapidly that, you know, following all the changes, it's getting harder and harder on myself. But you know, but I do understand the main principles. And I understand from the point of view, Marvin, of let's say the artists, like and then also comparing that to the web 1.0 through 1.2.0 and 3.0, that originally artists were signing up to the record labels, and then they made money on the royalties selling their records and then doing the concerts. Then we had a situation where you know they were selling traditional like media CDs and whatever. That eventually went away with the Napster, kind of got, you know, disappeared, and then the artists could not make any revenues only on the concerts. Then eventually they were able to recap it, but with like streaming services, and those streaming services, only the top notch artists can make any money. So that creates yet another opportunity to reward, let's say, the creative people, and then having them be able to make a living. But I would like to actually ask Wes a little bit, because he's in this regulatory body, and then he knows like what's going on in terms of how what the world looks at the NFTs and then all the crypto from the perspective of actually being able to put them on the marketplace, and the regulatory aspects of all of the NFTs. If you can tell us a little bit about that, because that's the line of your expertise, right?
Yeah, absolutely. So I think Radhika and Marvin both touched on the really exciting aspects of NFTs, but there's also the physical world component to it. And with that, you know, I'm talking about like today Gap announced that they're going to do a hoodie sale where if you buy X amount of NFTs, you'll be entitled to purchase that. Provenance tracking, supply for the supply chain or for medication. Self-sovereign identity will be very important. And with that, you know, if that's enabled, then KYC, AML in the DeFi space becomes much easier. Credentialing management is also very important. And even, you know, like one of the first use cases for me when I first interacted with NFT was actually attending a conference for continuing education credits. And just by scanning a QR code, I got an NFT that I could then pass along to our internal compliance team and prove that I attended and took the time to get that credit. But, you know, in the more the market space, it's, you know, trying to incentivize new types of behavior. You know, we're talking with one Bitcoin mining firm that's trying to push into the renewable energy space, but at the same time would like to make sure a portion of their profits go to a certain charitable cause. And so we were discussing with them creating an NFT whereby it's kind of like a Citicoin-esque model where they would, a user would purchase a space in the mining operation, they'll get Bitcoin in return, and automatically a portion of that Bitcoin due to their election will be automatically transferred to a charity of their choice, which we think is pretty exciting. When we talk about fractionalization of NFTs, you know, to increase liquidity, we see products like that are starting to venture into maybe the security space. So we're helping our partners out in allowing them to explore those options while not being worried about the regulatory aspects of it by interacting with our platform.
Thanks so much, Wes, to kind of tell us a little bit about that other aspects of this new technology that needs to be kind of put together and regulated. But anyways, let's just move on to like a subject of I have a question for Lara. Lara, you know, you've been investing in this business, and then we're kind of moving a little bit of on the border between the deep tech and the crypto and such. The deep tech, just for my knowledge, is just more complicated technology, whether that'll be Web 3.0 or it's just like hard to replicate. The barrier of entry is just like not as simple. So Lara, can you tell us about your experience and then your like a potential or one of your investments and kind of on an example of that investment, tell us about, you know, how you you know, what's your expectation and what those companies are, where you find them. Like, tell us a little bit of a story so that subject will be like better understood by everybody.
Yeah, so, I mean, deep tech is really broad, right? It's everything from people looking at deep aspects of security and related to crypto, battery technology, which I don't touch, fusion, which I also don't touch. But I think what's going to be exciting that you and I talked about before the call is that I think some really interesting things are going to happen in some of these over-invested areas within deep tech. So, you know, so say whatever you want about crypto, people are getting robbed left, right, and center. I was personally the victim of SIM card theft. When I was in Toronto at RBC, somebody hijacked my phone and went after my crypto wallet because I was named as one of the 100 women in blockchain. And that was the only thing they went after. And you know, clearly somebody gone into an AT&T store. I knew I was a victim of a Yahoo hack a long time ago. I'd gone and I battened down my security settings hard, but somebody paid for my info and got it. And mercifully, I thought Coinbase's security procedures were really poor at the beginning. So I had never funded my crypto wallet there, so they got nothing. Conversely, I had a friend with a T-Mobile account who lost $1 million in Bitcoin. So, you know, there are really interesting things that are going to happen, you know, as a result of trying to address those kinds of problems, because the standard solutions in security are not working for crypto. So that will then come back, end up more broadly used to secure secrets that will infiltrate the rest of the security industry. So for example, there's a really interesting company based out of both San Francisco and Portugal that's using hardware security modules, you know, sort of deep tech, to enable cold storage of crypto assets. But I think that that approach is going to be used much more broadly than just in crypto for large financial services firms to do things like store credentials for authentication, which is a huge area and problem for traditional banks who are trying to catch up with people like Apple on things like facial recognition, which they regard as the platinum standard, but they can't have access to. So those are things that I think are really interesting that are happening in deep tech that will end up driving really interesting technology developments that'll be usable by the broad, you know, general population that you may not think of as having originated in deep tech. Is that helpful as a framework?
Yeah, it is. Everything is helpful, Lara. I mean, listen, there's so many moving pieces in this new world, that it's just going to be a physical example. I mean, none of us had really understood how the Uber was going to be a dominant player in the taxi world, you know, but eventually we got used to it, and then we were using those tools on a daily basis, right? So, but I think that the purpose of us getting out there is to show the name of who we are, and then we're trying to solve those problems, and then hopefully, because of that, we're going to be the first pioneers, and some of them will make a lot of money, some of them will not. But let's hope that we all make money on this subject. But going back to like a good examples.
Sure, a good example of a company, I'm not an investor, but one of my mentees is a really interesting company out of Stanford called Iyengar, which is going after the position navigation and timing market. The people who actually started GPS were out of Stanford, Brad Parkinson and Jim Spilker. And so that's an over $100 billion market. It's a huge CAGR, and they've developed breakthroughs in super nerdy stuff in signal processing that enables them to track in real time the 3D location of any device that emits a radio signal with a known protocol, and it does that within a meter. And of course, as IoT has exploded, this becomes much more powerful. So without retrofitting devices or changing hardware or software, Iyengar can track them. And so they're already compatible with the next release of 5G, which enables them to track the real-time location of any phone, drone, or IoT device automatically. It's won competitions for Ericsson, Qualcomm, and Swisscom. They already have over $1 million in revenue, and a phenomenal team out of Surf, Trimble, you know, the leaders in location technology. And Steve Jurvetson, who's backed, you know, SpaceX and Tesla from relatively early days, is on the board. He only sits on 6 company boards, and I think that's a pretty exciting and disruptive technology, definitely clearly in the deep tech space.
Well, that's great. And Marvin, you seem to have like your ears to the ground, right? In this whole thing. So what's going to, like, what's the most exciting thing on your horizon? What's coming in? It's the beginning of the year, so hopefully we all are trying to figure it out. You know, what are our goals for the year? So what is your vision on moving forward with some of the exciting projects in the 3.0 world, or whatever you call it, the deep tech?
I mean, it's interesting, sort of like the intersection of, you've probably heard this term, like the creator economy, right? So just like there's an aspect now where the creator economy, which is all these platforms, right? The Patreons, you know, you go down, there's lots of, like YouTube, you could argue is a creator economy company. You sort of see this world which is enabling. It's like, I heard this great term is called like the gig economy for brains, right? So it's an idea of just like all of a sudden you have a bunch of people who can't make, it's hard to do their old jobs. We're all virtual now. So all of a sudden you sort of see this opening up of new opportunities, but then that also, we're all working remotely now. So I look for companies actually in the Web 3.0 world is a very different world, but in some ways you see these worlds of creator economy where you see these platforms enabling people to make money online, whether it's consulting projects, whatever it is, with sort of like this Web 3.0, which is you can now, whether you're an influencer, you're doing other things, where one of the challenges of being an influencer right now is that you don't actually, if you get booted or deplatformed, which is very regular for a lot of folks these days, you're done, right? Like you basically have to start from scratch again. And what Web 3.0, in theory, what Web 3.0 is supposed to do is that enables you as a creator or an influencer to basically own your own audience, right? And build your own community and audience. And those are the type of platforms. So I invested in a company called, full disclosure, we invest in this company, it's a company called Beam. And the idea is like, how can you allow, say, like someone who's creating a lot of video content, you can still do it on YouTube, but how can you actually do this on Beam and sort of manage your audience and, be portable, allow your content to be portable? That's really interesting. And so, we're really, really impressed by the founders. We like them because they came from the old world and they came from like Hollywood as well too. So they saw these problems. And I think Web 3.0, it's just like, this couldn't happen 4 or 5 years ago. This is only happening now because I think the infrastructure and the tool sets being built is still very, very early days, but stuff like that's really interesting, right? The creator economy of Web 3.0, these two aspects, I think has really supercharged this market.
Yeah. So in other words, you're your own value, right? So, and then essentially you're allowed to, your thoughts, your innovation is through Web 3.0. And then if you happen to be influencer, it's not the Instagram that owns your connectivity.
Or I think it's even terrifying.
Separate application.
Yeah, like one of the challenges, like, look, I'm not a fan of Trump, but like the fact that the president of the US can be deplatformed is actually frightening for anybody who has a social media following, right? Anybody who's relying on social media or online for getting business. That should be terrifying for everybody, right? So just like, I think there's a lesson there where this is, I think, one of the reasons I think Web3 has become super interesting to many people.
So it's like the decentralized DeFi Twitter of some sort with the value on each one of the thoughts. I mean, I'm still trying to imagine all that stuff, but
I think the difference is there's an infrastructure to really catalyze your audience, right? And there's an incentivization. The token structure is incentivization for them to support you, and so there's lots of aspects there. That there's alignment of, in my opinion, there's a bit, in theory, the way it's being built out right now. In theory, there's a better alignment of goals and incentives.
Mm-hmm. Is it an alignment or is it a Ponzi scheme?
Maybe both. I mean, there's a lot of rugs. There's a lot of garbage out there, and I would say it reminds me a lot of, as an old guy, like, it reminds me a lot of like 97, 98, 99. Just like there's a lot of blatant scams out there, and so I will not be surprised if there's a major crackdown. They're still cracking down on people on some of the ICO scams from 2017.
So can I just jump in here for 1 second? So my perspective towards the deplatforming of Trump is that, from a net present value point of view, Trump brought a lot of users to Twitter and they benefited from him being on it. And they're deplatforming him. It's like the same way as Microsoft used to sign these agreements with software companies and then copy their software and run them out of business. So it's kind of that cutthroatery of the tech business, the tech world. And so if you're doing this DeFi approach, it's much more beneficial to the actual content creator or the person with the content relationships, which I think is, really important in the social world. So from a DeFi point of view, the person who should benefit is the creator and the person who brings their community, right? Not
Yeah, you nailed it. Yeah, you nailed it, Marty.
Yeah, exactly. Right.
Yeah, but it creates another interesting subject because eventually it's going to be DeFi and it's going to be Metaverse, and then for one like 120 IQ person or 140 will be able to decode it, what's real, what's not real. But that's another problem altogether, right? But let's talk with Wes for a sec. I mean, where's your platform, the Oasis? Is that something that do you have a tool that enables you to actually freely market the NFTs, or where do you fit in all that in that universe?
Yeah, so through two mechanisms. First, we have a primary marketplace. So if somebody wanted to do a NFT issuance that represents some sort of security, whether it comes with the rights attached or cash flows or underlying physical real world assets, or even upland properties, it could be offered on our marketplace. And then on our secondary marketplace, we allow for trading and price discovery. And with the added benefit of being deemed a digital security, you have to have built-in mechanisms where if things were to go wrong, like if your phone was hacked and you lost all your cryptocurrencies and your digital securities, while your cryptocurrencies might be gone, since the digital securities are really recorded down to a ledger, the cap table, we know who the true beneficial owner really should be, and we can burn and remint to those wallets. And through our platform, we're providing ways, basically integrations with other DeFi platforms to market or use these NFTs as collateral.
Oh, but that's great. So no more worries about the hard drives on the garbage dump. It just like by utilizing your platform, you kind of like you can sleep well. That if somebody steals your phone, you can interrupt the blockchain and just invalidate it and then just kind of move on with your life, right? Hopefully.
Yeah, I wouldn't say it's interrupting or invalidating the blockchain. It's more burning the tokens that the thief now holds and reissuing similar tokens to the proper wallet address.
Okay, that's good. Radhika?
Yeah, can I just jump in? Rewinding half a step to what Laura was talking about. One thing is that, when we're talking about crypto and security, keep in mind that a lot of the marketplaces and exchanges are not decentralized. They're centralized marketplaces and exchanges. And so therein lies some of the security foundational flaws, because a lot of the issues that Laura, you've been talking about is with, again, Web 2.0 infrastructure as it's meeting Web 3.0 crypto kind of applications. And so where the two meet, there you still have vulnerabilities. If you have a truly Web 3.0 model, it's really ultra secure. So I just wanted to throw that out there. The other thing I wanted to mention in terms of DeepTech, if I see, how we can think about DeepTech, it's really sci-fi. You think about it, it's VR, AR, IoT, AI, every acronym you can think of, robotics, and it's all sort of amalgamated together. And that's what's really creating this deep tech landscape. But Web3 is a sort of a foundational infrastructure that we can see that is going to be interacting with all of this. And so when I think about what's exciting out there in deep tech / Web3, this is the kind of future that I'm envisioning, where all of these convergence of technologies are going to be possible. The Web 3.0 infrastructure, as I think about it, is really what's going to be exciting. So if you think about, for example, what does it mean to have an open and decentralized metaverse like I was talking about? This is going to be where we are going to see that convergence of VR, AR, AI, IoT, all of these things merge together within the metaverse. And right, it's all based on decentralized identity. It's all based on decentralized architectures. The half steps or quarter steps that we're seeing, Meta, for example, exploring the metaverse, that's a private, closed centralized metaverse. They are talking about some capabilities because otherwise they're going to be really run out of the space. But I would say that in large part, that is not what most people are talking about when true metaverse is going to be open and decentralized. I just wanted to clarify a couple of points, with respect to what my colleagues were talking about.
Yeah, it looks like Netflix is going to go out of business eventually by creativity of the users creating like alternative worlds and to be far more entertaining than what's giving to us on the plate.
Yeah, I mean, just one thing, or I mean, in regards to the metaverse, I think the company you should be watching that's going to drive the metaverse is probably more Epic Games over sort of like Meta, or formerly known as Facebook. I think Epic is everything they're doing, all the infrastructure they're building is meant, and sort of all the lawsuits, engaging in that very expensive lawsuit with Apple, everything is toward driving this like open, interoperable, sort of like metaverse. So they're the company, they're the ones to watch, and I think they're the ones who's going to basically push whatever this metaverse thing is going to turn into. I think they're the ones who are going to push it.
Hey, Marvin, don't they have different economics also? Like their financial
yes,
model?
absolutely. Yeah, absolutely right. That's absolutely right.
Right.
I'll just say
Facebook is more extractive.
Yeah, I'll just say that too, Marvin, building on what you're saying, companies that are actually focused on layer one solutions for this open decentralized metaverse, so interoperability solutions, multi-chain, cross-chain solutions are really going to be key when we think about what open metaverse really truly means. So I agree with you that the future is really born by this open cross-chain, multi-chain kind of metaverse. And so layer one is, I think, going to be hugely interesting going forward, and all of the solutions that are coming out that are going to be necessary for that. Those are the underpinnings for the future that we dream possible.
Great. Radhika, you're talking about all the different layers and such of definitions, but there is really no one that is overlooking the actual definitions. I mean, who's responsible? What body is defining layer one of the Web 3.0? Is that something that we're all coming up and agreeing as a wider community, or?
Absolutely, they're absolutely. Layer one is sort of the base, right? These are the base chains that we're talking about. So anything that is very base infrastructure is what is referred to as layer one. Layer two, seeing like decentralized apps, for example, those are going to be in layer two. So, for example, if you look at the base chains, I personally like Solana. That's a great example of a layer one base chain because first of all, they're sustainable. They're not energy consumptive as some of these other proof of work chains are. The other things that you can think about is solutions that are offering either interoperability, scalability, all of those things are going to be incredibly important from an infrastructure standpoint, because otherwise we can't truly realize this future, this exciting future that we're building. So it's going to be a combination of those who have the vision to provide that exciting future to the consumer. I think that on the one hand. On the other hand, you're going to have these layer one and layer two solutions where at each layer you have an ingredient that is incredibly important in order to deliver that to the consumer, right? So this is what you mean by, I think, Web3 full stack. That's kind of a new full stack that we're looking at because it is, you're going to need all of it. If you think about, and this is the parallel, you think about the internet and what has been possible over the last few decades on this internet, that there are multiple components to that. So there's different layers in that stack, and it's very similar in sort of combinations of different things that are going to have to be able to deliver what we're envisioning for the future. But I think that, what's exciting to me is, and where the big opportunities for investment, not to mention the people that are actually building this, is about building that full stack. So it's layer one, layer two, plus where it really applies to the consumer, right? The consumer is not going to see it and say, oh, I'm using this for layer one or layer two. They don't really care. As long as they have the functionality that they want, that functionality is going to be driven by, ownership via NFTs, for example, decentralized identity, and all of these things that are going to be critical components. But the consumer won't really see all of that. They'll have a very clean, sort of convenient interface and things that they're oftentimes used to doing, right? That's one of the biggest pieces of conversation coming up time and time again, as I understand, saying, well, people don't want to think about it. You're absolutely right. People don't want to think about what goes on behind the scenes, but we're doing things all the time. We're having a Zoom call. What does it mean to have a Zoom call? All that underlying technology that made it possible for us to be having this call, right? So similar thing on the Web3 and Metaverse side too.
Arthur, I shared your confusion because, like you, I grew up with the OSI 7-layer stack, which is very clearly articulated and is common knowledge for anybody who grew up in the networking in the networking space.
Yeah, well, it's I'm really, Radhika, I'm really looking forward to reading your book, and I hope that you guys will write another one, right? I mean, you have the book on the blockchain. I mean, tell us a little bit about it, because I think it's important, because it's we are like the whole definition and any kind of a clarity that one can get. It's going to be helpful to all of us, you know, whether we're in the old world of C coding and then selling the applications for the IBMPC, or the ones that are actually going to build a new world, right? Tell us a little bit about your book.
Sure. I mean, we wrote the book called Enterprise Blockchain Has Arrived. It's my co-author, Jordan Woods, and myself, and we're StarChain Ventures as well. And really what we wanted to do when we wrote this book was to make that information about what is real, what is, demystify a lot of the misinformation and disinformation that is out there, and really crystallize it in an easy to read format that was going to be accessible. Because again, you know, when we think about what Web3 means. I mean, we actually called it Web3, and we talked about Web3 in our book back in 2019 when people weren't even talking much about Web3. And so the point is that this vision of this new reality or world that we're building, we're just building the building blocks. Much of it doesn't really exist yet. So these are where the great opportunities, not only from the investment side, but also for the entrepreneurs that are actually building these components. So you think about, well, what's necessary for Web3? And one of the reasons why we wrote the book is to at least open up the conversation around this and look at the use cases behind it, because it's not just, you know, we're talking about NFTs or Metaverse. Absolutely, those are very much things that we're interested in. But if you look at financial services and banking, or healthcare, life sciences, or supply chain and logistics, power and energy sector, every single area, there's GovTech, there's enterprise in general is really going to be the driving force behind this whole movement, if you will. And so when we wrote the book, we wanted to make sure that that message was clear, and those definitions and that clarity was going to be around this discussion. And here we are, you know, a couple years down the line, we're still facing the same sort of many people not really sure about what this really means. So what's exciting for us is, you know, to see understanding and clarity around this, and number two, driving broader acceptance of this, because I think building this brave new world is going to need that broader acceptance and understanding. Right. And so that's kind of why we wrote the book. And of course, we're probably going to be writing other books on this topic.
Radhika, can I just jump in for 1 second here?
Absolutely.
So I think one of the issues, and I think you're kind of getting towards it, is that there's a real need for transparency in the stack, right? And I think that every point where someone can shut you down is a risk area. And, you know, if I was like an Oasis Pro Markets, I would be saying, well, from a regulatory point of view, all risk areas should be disclosed. And one of the risk areas, of course, is that, you know, if you look at what happened with Trump or all the conservative movements, the whole stack was aligned against them, right? They shut off from Amazon's, you know, cloud services. They were shut off from Google cloud services. So all of these efforts, stacks were against them, right? Mm-hmm. And it's very important as you go into having any product set that you know where, you know, potentially, you know, these issues may crop up. And not only that, but I think that we have a very US-centric, you know, group. But if you look at the rest of the world, and I think almost everybody on this call, or half the people on this who are speaking at our events are typically foreign-born or first generation. And, you know, the rest of the world really looks at things differently, and they're looking for clarity, and they're really not looking for Big Brother or, you know, a heavy hand to say what you can and can't do, right? So you know, I think transparency really matters in a way that is beyond, you know, clarity, right? So transparency in a way where people can do as they want to pursue. So,
well, I think you bring up a really great point. I have to commend you on that point, Marty, because for me, transparency is the ethos of blockchain. The reason why we have blockchain, the reason why we have Web3 is because of transparency, security, privacy. These are core tenets of this new way of looking at things. And the stack that's being built is driven by this ethos of transparency and privacy and security. That trifecta alone is a huge part of the believers, if you will, in this space, and looking at a brave new world that we're building that doesn't have to rely on an intermediary centralized entity defining what it is that's real or isn't, and saying you can or shall not do this, that, or the other. So yes, regulation is extremely important. So the compliance aspect is also very critical as we move forward. This is one of the reasons why I play at that intersection of technology and policy, because good policy as well is going to drive, and further innovation in this area and not stifle innovation. But we do need safeguards, protections,
well,
right?
So I was hoping that we could get some perspective from Wes on this, because from what Oasis, pro market does, and what the regulatory stature is, the reality is a lot of the crypto world has not been transparent, right? And I was hoping that Wes could kind of address that, and how they look at things. Wes?
Yeah, real quick, I think a great way to summarize what Radhika's been saying with regards to blockchain and what it will be is I like to describe it as the backbone or the spine of all these crazy new technologies. It'll really be the true value driver. But in terms of transparency, I think while some blockchains, it's harder to tell the identity of one individual, those transactions, are there forever. And you've seen it this summer when the IRS was able to shut down a Bitcoin mixer where they traced the transactions all the way through the last 10 years back to 2012, and even went through transactions of now defunct cryptocurrencies to arrive at the individual who was running that Bitcoin mixer. And their only piece of information as to his identity was at one point he had included his wallet address as in a line of form for payments of cloud computing devices. So the ability to find that is quite amazing. But I think, transparency is really starting to show through its benefits in the blockchain. When you look at the carbon credit market, today, the two largest markets with the most standardization are those of China and Europe. And, blockchain is now allowing these credits to be traded in different markets and creating a more unified global market. And then it also helps tackle the problems of greenwashing, where you can really see the power of the energy products that you're building out, and the renewable energy is actually there instead of focusing on off supply chains that are outside of your direct corporate jurisdiction. You can now really follow that all the way through.
Great. Well, thanks so much. Actually, I have a quick question for Marvin. Marvin, you've been kind of doing the work yourself, being spread into multiple projects. So what's like the coolest project that you can tell us that you've been involved in that you can share with us, from, let's say, growing from ground zero to right now, and that you wanted to share it with the audience?
Yeah, there's one, but I'm not sure I'm allowed to talk about it at this moment. So, but it's in the gaming sort of like finance sort of space. So, maybe the best way to talk about it, people are familiar with like Axis Infinity. Axis Infinity is this it's a game that came out of it's this, I would argue, sort of what you could call like a Web 3.0 game. There's a lot of competitors to this company, but I would argue they're one of the leaders. And they started off where there's a whole gaming economy where actually a lot of I think people actually make their living on playing this game. And they just recently raised quite a lot of money. There's a lot of different players in this space and different angles and different areas. And we have a play in this area, but I can't speak too much about this. Very, very specific sort of niche play. That part's really interesting because if you look at what Axis and I'll talk about their private company, but Andreessen just put in a couple $100 million into this company, and it's quite interesting because if you look at how many folks from the Philippines, like very, very lower income folks, who are actually supporting their families from playing this game, it's really interesting. It's incredibly interesting, and just this virtual economy where it's like another version of this like metaverse. Where they're literally making enough money to support their families, especially because they can't work because of lockdowns and things like that. That has been fascinating, and so that's one area that I'm my company are exploring very deeply.
Right. We have about 4 minutes, so I would say like let's do the wrap up. Like 1 minute, starting with per person, starting with Radhika. What do you think that this year is going to? What is the biggest challenges and hopes for this year?
I'll just say, I'll talk about the hopes. The hopes are, there's a lot that's going on in just Web3 in general, but I think with respect to NFTs and Metaverse, one is I talked about the convergence of multiple things, right? And so we're talking about GameFi, so DeFi and NFTs and GameFi. There's play to earn as in that component. Marvin, we were talking about countries like Philippines or whatever, people that have lower income capabilities, but here they're actually earning money in these games. So now moving that to the metaverse, there's a whole new layer of interaction that comes from that, from ownership and being able to generate income, real true income. So it's not just in-app game sort of gains, it's actually translates to real world gains, right? And so that's very exciting. And I think that this opens up a lot of opportunities across the world. So looking from a global perspective, as Marty was saying, this is not just a US centric sort of perspective, but of a global perspective, emerging markets perspective, selling NFTs, buying NFTs in an open decentralized metaverse. That's pretty exciting. So I look at that and I'm looking at that particular aspect as being very, well, pun intended, game changing.
Oh, that sounds great. Wes?
What I'm most excited about, I think, for the year ahead is the use of real world assets in DeFi. MakerDAO with last year's StarChain bond issuance, seeing more of those type of assets coming online. Being able to maybe help those who are underbanked have access to a new type of credit score. One project that I found really interesting back in the ICO days was AirFox, and through browsing on your phone, you would earn this one token, and this one token was redeemable at 500 mobile carriers, and you could use it to buy more minutes, or you could use it to pay your utility bills or what have you. And based on how you used and held onto those tokens, it would develop an algorithm that would determine your new credit score in areas where you wouldn't have one before. And I think more projects around like that would be extremely interesting. And I think the one problem I really hope gets solved this year is bottlenecks on the service provider side. For instance, qualified custodians, they have a real issue trying to, create data standards or integrations with one another, and really want to maintain a walled garden. So, maybe working through that and creating a multi-custodial hub type model would be really cool.
Well, thanks. Marvin?
I think the things that I'm most excited about is this sort of like overall trend, which is going to be enabled by sort of Web 3.0 and crypto, but it's like everybody becoming an investor, everybody becoming a creator. And this gig economy for brains, I think you're gonna see, we saw crazy entrepreneurial growth happening, not just in the US, but Canada and many, many countries, due to sort of like the pandemic over the last 2 years. And so I think that's only going to continue, but you're going to see more platforms and tools, both Web 2 and Web 3.0 sort of like tools that will enable this. What I hope, my hopes for this, so that's what I'm excited about. My hopes for this year is, I think, just better regulatory policy, particularly in the US toward crypto. It's really confusing. Nobody really knows what to operate. There's just so much illegality as well too right now. And also just better UX. I hope we bring in more designers into this space because the user experience is really awful right now. But it's mainly technical, so these are fixable things.
Well, thanks, Marvin. Lara?
Marvin, I couldn't agree more. We need better regulation. The fact that Elon Musk was able to manipulate billions of dollars of cryptocurrency and not receive so much as a slap on the wrist is really horrifying to me. So I'm not at all sure that it's just a technical issue. I think that there's a lot of education and work that needs to be done actually on enforcing policies we already have in place for other assets.
For sure, agreed.
With respect to what I'm excited about, I spent a lot of time in the fintech space. I'm really excited about what I'm seeing going on in prop tech, including tokenization and democratizing of expensive alternative assets, which I do think is enabled by blockchain. I haven't been thrilled with some of the teams I've seen addressing that, but I think that's a huge and exciting area. And very excited by the innovation I'm seeing in the CFO stack, which is going to enable faster payments, faster time to close the quarter, et cetera. And fears I have as an investor around inflation and what's going to happen there.
Great. Well, thanks so much. That was really interesting, and I hope to see you guys again and kind of plowing the subject and getting deep into full understanding. And that was very, very, very good conversation we had today. So thank you very much. Thank you, Marty.